Sorry, everyone. I think I jinxed us. After 2 days of being sarcastic about opening to gains, we are opening to a loss this morning, about the same amount as both of those days' gains combined. My bad. MBS were down 36 basis points on the open. Other than divine retribution, bonds were a tad stronger in Asia but lost ground steadily in Europe to open the U.S. session a few basis points higher. The first move was into even weaker territory at first, but with some hints of ground holding, the ground holding could merely be a mini wave of short covering. And then we got the PCE numbers. So the Fed favorite of inflation, the core PCE, came in a month over month up 0.6%. Now remember, it's supposed to be up 2% on the year. It's up 0.6% month over month versus a 0.4% forecast as 0.4 previously. Core PCE prices were up 4.7% for year over year versus a 4.3 forecast, so it's not really going down because it was 4.6 previously. The previous month was revised up 0.2. So actually last month wasn't as good as we thought it was, and then this was even worse. Great. Personal spending after adjusting for changes in prices jumped 1.1%, rebounding from weakness at the end of the year. It was also the highest reading since June of 2022. The March Fed Fund futures are now handicapping a 1 in 3 chance of a 50 basis point hike at the March meeting. Note that we will not get February PCE numbers till after the March meeting, but we'll get another look at the CPI and the PPI. New home sales rose 7.4% month over month to a seasonally adjusted annual rate of 670,000. This is still down 19% year over year. The median house price was flat year over year basis at $427,500. The average price fell 5.3% on a year over year basis. The personal income and outlay number above were confirmed by the University of Michigan sentiment survey. Consumer sentiment rebounded strongly in January, both on a month-to-month basis and an annual basis. People talk about, is there going to be a soft landing, a hard landing? Meaning, is a soft landing, will we be able to get inflation down without a recession? Hard landing is we get it down with a recession. Now there's talk of expecting a no landing for the global economy. This means that the economic growth holds steady and inflation remains high. This scenario would result in tight financial conditions for longer and could weigh on government debt and risk assets. Economists surveyed by Bloomberg expect the Federal Reserve's peak interest rate to be higher than what they had previously expected. The economists expect policymakers to raise the Fed funds rate to a peak of 5.25 and hold it there through the rest of the year. That was from robchrisman.com, from me.org, which is just me. I think it's going to be higher than 5.25. I don't think that's going to get inflation in handle. So the PCE inflation data has been relegated to an occasional and modest market mover. In the current environment, traders have been doing whatever they need in response to comparable CPI data that comes out much earlier in any given month. But expectations are made for the PCE data that sings a definitely different tune, such as today's. It matched the decades high reading at the core level month over month, and thus set yields higher. So we had a rough day all in all, despite the unpleasant motivation and the 10-year almost hitting 4%. Things could definitely have been worse. At the end of the day, we were down 30 basis points at 99.66, which is about a 15 basis point improvement to the worst parts of the day. Like I said, at 99.66, we are right below that bottom line on the 5.5 graph, which is a ceiling at 99.711. With the 2023 Q1 earnings season almost over, it appears that the net profits for S&P 500 firms will be 11.3%. While this would be the sixth straight quarterly decline and well down from their peak of 13% in 2021 quarter two, it returns profits to where they were calendar year 2019. Despite higher sales prices, elevated labor, materials, energy costs are being felt. Lower profits could lead to reduced corporate investment, lower investor payouts, and layoffs, which is all the things we need in order to stifle inflation. Also got a post from our sponsor at WellThatMakesSense.com. This is about the process of converting a normal everyday civilian into a customer is not 1 to 2 steps. It's a multiple step process of doing that online. So from Digital Marketer, we have a great series starting of how you convert people from people shopping on the internet, browsing around and looking at things, into customers in your pipeline. And it is not 1 to 2 steps, but we'll break it down for you in this series. So check it out at WellThatMakesSense.com. Next week on Monday, we get durable good orders and pending home sales. Tuesday, Case Shiller price index and the FHFA price index Wednesday. Mortgage apps, don't even care about those anymore. ISM manufacturing PMI, initial jobless claims on Thursday, and ISM services on Friday. So have a great weekend and check out some of our common sources and influences, particularly our sponsor at WellThatMakesSense.com.